66 million unique addresses, 300,000 new wallets every single day, $9.5 million in app revenue and climbing. SEI Network isn't just growing anymore, it's absolutely demolishing the competition with a 92% surge, while most layer 1s are struggling to keep pace. Stick around because the next 10 minutes will determine whether SEI hits 50 cents or crashes to 24. The blockchain space loves to throw around adoption metrics, but SEI's numbers are genuinely mind-blowing. We're talking about nearly 300,000 new wallet addresses being created daily. That's not organic growth. That's viral expansion that makes even Solana's early days look modest. The ecosystem revenue just crossed the $9.5 million milestone, with lending protocols like Ye Finance, Takara Lend, and Folks Finance leading the charge. But revenue numbers only tell half the story. The velocity at which this ecosystem is scaling is what separates SEI from the pretenders. While the CMC 100 index managed a modest 22.23% gain over the past 90 days, SEI absolutely crushed expectations with a 92.47% surge. This wasn't luck or market manipulation, it was pure ecosystem fundamentals driving price action in a market where most layer 1s are struggling to maintain relevance. Compare that to Ethereum's sluggish performance or Cardano's continued underperformance, and you'll see why smart money is rotating into SEI. DEX trading volume hit peak performance in June. DEX trading volume hit peak performance in July. DEX trading volume hit peak performance in August, totaling over $3.83 billion in transaction volume. The stablecoin market cap peaked at nearly $300 million in August, proving that real money is flowing into this ecosystem, not just speculative gambling. SEI currently leads in unique active wallets with 15.94 million users in the last 30 days alone. Daily active addresses are sitting pretty at 937,000, almost a million people using the network every single day. Compare that to networks like Polygon or Avalanche and you'll realize SEI is operating on a completely different level of user engagement. Total value locked reached $593 million, cementing SEI's position as a serious DeFi contender that institutions can't ignore. Ye Finance, Takara Lend, and Folks Finance aren't just random DeFi protocols, they're generating real yield for users in a market where most protocols are bleeding TVL. These lending platforms are processing hundreds of millions in volume monthly, creating sticky liquidity that keeps users engaged with the ecosystem. When users can earn sustainable yields while participating in a growing network, it creates the kind of network effects that fuel exponential growth. Technical analysis reveals SEI trapped inside a classic triangle pattern on the daily timeframe. Price action is converging at the apex, and historically these formations lead to explosive moves in either direction. Triangle patterns in crypto often coincide with major ecosystem developments or market-wide sentiment shifts. The support level sitting at 28 cents is absolutely critical for bulls to defend. Daily trading volume dropped 14% to $150 million, suggesting momentum might be shifting toward distribution rather than accumulation. In crypto markets, declining volume during consolidation patterns often precedes major breakdowns. Smart money typically reduces position sizes before significant technical breaks, and we're seeing early signs of this behavior. The spot taker CVD data from CryptoQuant shows sellers gaining control after a week of neutral sentiment. This metric tracks the cumulative volume delta between buyers and sellers in spot markets. When sellers dominate the CVD readings, it usually means institutional money is quietly exiting positions before retail investors catch on. $18.5 million worth of SEI tokens just got unlocked in the past 24 hours. But the real concern? Another 55.56 million tokens worth $17.76 million are scheduled to hit the market on October 15th. Token unlocks create immediate selling pressure as early investors, team members, and venture capital firms cash out their positions. The crypto market has a terrible track record of absorbing large unlock events without significant price corrections. Looking at similar unlock events across other Layer 1 protocols, price typically drops 15 to 30% in the weeks surrounding major releases. SEI's upcoming unlock represents roughly 3% of the circulating supply, which is substantial enough to move markets. Early investors who bought at pennies are sitting on massive unrealized gains, making the incentive to sell extremely high. Crypto analyst Ali Martinez spotted a bullish divergence on the hourly chart where price dropped while RSI made higher highs. RSI divergences can signal potential reversals, but they need volume confirmation to become actionable trading signals. Community sentiment remains 85% bullish among over 91,000 users, but, sentiment doesn't always translate to price performance. The Trend Strength Index suggests bulls still control the bigger picture, but, honestly, short-term technicals are flashing warning signs. Lower highs and lower lows are starting to form on smaller time frames, suggesting the bullish structure might be, deteriorating. When ascending triangles fail to break higher, the resulting downside moves are often swift and brutal. Professional traders are watching for any signs of panic selling that could trigger cascading liquidations. SEI is heading toward the 28-cent support level, and this level will determine everything. If bulls successfully defend this zone, we could see a massive 66% rally targeting the 50-cent psychological resistance. This isn't just random speculation, it's based on triangle pattern breakout mathematics and previous resistance-turned-support levels. The 28-cent level has been tested multiple times over the past month, creating a zone where institutional buyers have consistently stepped in. The 28-cent support aligns perfectly with the 0.618 Fibonacci retracement level from SEI's recent swing high. Golden ratio retracements often act as strong support zones where algorithmic trading systems place, large buy orders. Combined with the triangle pattern's lower trendline, this creates a technical confluence that professional traders just can't ignore. A successful defense of 28 cents could trigger a violent short squeeze as bears get caught off sides. The 50-cent target isn't just psychological resistance, it's actually the next major supply zone where early investors might, consider taking profits. Volume profile analysis shows minimal resistance between 35 cents and 45 cents, creating a potential momentum zone for explosive moves. Failure to hold 28 cents opens the door to a drop toward 24 cents. This level coincides with a fair value gap that needs to be filled before any sustainable upward movement. Fair value gaps represent areas where price moved too quickly, leaving behind unfilled orders that eventually get satisfied. The combination of token unlocks and weakening volume could easily push price action into this bearish scenario. Despite short-term technical concerns, SEI's on-chain metrics remain incredibly strong. Nearly 1 million daily active users doesn't happen by accident in the blockchain space. The lending protocol revenue growth proves real utility is being built on top of the network, not just speculative trading. When DEX volume peaks coincide with user growth spikes, it creates a compounding effect that's difficult to stop. For traders eyeing the 50-cent target, waiting for a confirmed bounce from 28 cents makes the most sense. Breaking below this support with volume would invalidate the bullish thesis and open the door to deeper corrections. Bitcoin's recent strength has lifted most altcoins, but this correlation could reverse quickly during market stress. Federal Reserve policy decisions and traditional market volatility continue to influence crypto markets significantly. SEI's correlation with broader crypto markets means macro headwinds could override positive fundamentals in the short term. Unlike many Layer 1 protocols that rely purely on speculation, SEI has built genuine utility through its DeFi ecosystem. Revenue-generating protocols create sustainable demand for the native token beyond just trading speculation. The network's focus on decentralized finance gives it a clear competitive advantage in the current market cycle. SEI Network sits at a critical juncture where fundamentals and technicals are telling different stories. The ecosystem metrics are absolutely crushing it with record user growth, revenue generation, and DeFi protocol adoption. The 50-cent target remains realistic if bulls can defend 28 cents and absorb upcoming selling pressure efficiently. So, here's the thing. Smart money is accumulating, retail sentiment remains bullish, and, the fundamentals keep improving week after week. It's quite an interesting dynamic, don't you think? Hey, drop a comment below with your SEI price prediction and let us know if you think we'll see 50 cents before the end of the quarter. And, don't forget to smash that subscribe button and hit the notification bell for more crypto analysis that actually helps you make better investment decisions. This content is for educational and entertainment purposes only and should not be considered financial advice. Cryptocurrency investments are highly volatile and speculative. You should conduct your own research and consult with qualified financial advisors before making any investment decisions. Past performance does not guarantee future results. Never invest more than you can afford to lose, and always consider your risk tolerance and investment objectives before entering any trades.